Hi, we're Oxygen Conservation, and this is the Shoe Room Sessions.
Alicia, welcome to the Shoe Room Sessions on tour.
Thank you for having me.
So we are, thanks to our wonderful spot in Knife Route, we are at 8 Harbour Square in London today. What an awesome spot. I do want this concrete poured industrial city. Very cool. So thank you for coming in, and really convenient we're able to do it in London for you as opposed to dragging you all the way to Devon. But you are welcome to the Shoe Room at any point.
I would like to come.
Can you tell people who you are and what you do?
My name's Alicia Gibson, and I'm director at Finance Earth. We're a social enterprise, employee-owned, and our mission is around increasing investment into nature recovery. So through that, I'm very fortunate to work with environmental NGOs, government, farmers, companies, to help them identify and unlock new forms of income and finance for their nature conservation goals. And then we also raise and manage funds to invest for multiple nature projects. And then we advise on the development of all the different building blocks that are required to create this new, emerging, complicated nature market.
Perfect. So how did you get there? What are the chapters of your career that led you from where you grew up to being here today?
So probably the reason why me today has to start from when I was very much growing up. So I grew up right alongside a river called the River Kennett in Wiltshire. And it's a chalk stream, which since I found out is a very rare, precious, beautiful, threatened ecosystem. And it had it all, really, the kingfishers and the crystal clear waters and the swans and the fishermen on the side of the shores. And really that was where I saw the power from the river. And then over the valley was the Savernake Forest, which you probably don't know being from up north. But it's also it's an ancient forest with some of the oldest oak trees that I've ever seen. So they all have names. They're called like the King of Limbs, and they're just absolutely giant and powerful and nature awe-inspiring. And meanwhile, my dad also, I have to say, is a source of inspiration. He was a local farmer, small-scale dairy farmer, and a very passionate conservationist. So he was a treasurer for the local Action for River Kennett, the kind of person who counted species of bees, butterflies, and beetles every year to look at nature decline, and a beekeeper. And so really I had that sort of collection of innate nature, farming, river, landscape within me. So, but that wasn't really, I wasn't born to be a nature conservationist. I actually spent a lot of my childhood kind of rolling my eyes at crisis on the farm and complaining about adults' obsession with views and all of that. So I can't claim that I was nature from the start. But really my career probably started where I went and studied economics at university.
Why?
I was sort of generally a generalist, but I liked the way economics had that mix of using kind of thinking to solve some of the societal issues. So, you know, how we manage our economy and create business opportunities and sustainable development. So I really focused there on environmental economics. It was a new module. Everyone there was very focused on internships and finance and banking. But I really loved the concept of how we could use economic thinking to solve environmental issues. So overfishing and the tragedy of the commons, and over-tourism with willingness to pay for user fees. So it was that kind of concept was, I feel, quite amazing to see environmental and finance sort of going together. But I did launch into a very traditional career and became a chartered accountant for my sins, and studied at Deloitte because it felt like the sensible thing to do. And everyone told you that that's the kind of thing you should do. But meanwhile, I came home and actually saw the massive impact that humans were having on the river itself. So you could no longer see the bottom of the River Kennett. It was cloudy, come back and all the sewage had come in, all the species had died. We'd lost all the coots on the river, and there was just so much impact there. And so I was thinking, how can I find a way for environment economics to come together with conservation of the river and all the work that the local conservation organisation were doing and finance. So that's really when I just came across, by chance, Finance Earth. And it was just starting out as a tiny little social enterprise, didn't have a website, just the founders. And I just thought, wow, I can't believe a company exists that's just trying to do that thing that I thought about with finance and the environment and nature conservation all brought together. And everyone told me it was actually probably quite mad. The sector was entirely new. Who would think about trying to make finance and nature come together? They just don't speak to each other, and create a social enterprise that was going to be viable in that way. But really, my dad said to me, this really is my dream job. I don't believe it exists. I don't think it's going to work, but I think you should go for it. And I've been there ever since, the last 7 years. So we're now a team of 40 from just that little startup. So it's been an amazing journey.
Wow. And what does the world look like in terms of difference between environment economics 7 years ago and where it is today? What's changed?
I think when we really started out back then, sort of the concept of investing in nature, it was just very much a concept. We were still working through sort of what natural capital means and what investment is. But we've actually really seen now, even we were looking internationally initially, and we were looking at social investment market. And we've seen that investment in nature, even in globally, has risen by sort of 11 times in the last 4 years. So it's massively started to grow. And I think compared to when I started out, we were the only organisation really who was focused on this. And now we have this just amazing collection of organisations like Oxygen Conservation, ourselves, and other people working on the different elements like the monitoring, verification, or the carbon codes and standards, and investors looking at this, and conferences and events, and everyone coming together to collectively grow this market. I think that's also kept me there ever since, is just the fact that it's constantly new, different elements are emerging to actually create this as an entirely new sector of restorative, regenerative economies.
When I try and articulate it to people, one of the easiest ways to do it, I think, is to say 7 years ago, a big project to the environment sector that would have got press release was a £50,000 grant, or a £100,000 grant would have been transformational for a wildlife trust or a rivers trust. And now we're hugely fortunate, because of the incredible backing we've had, to have a portfolio valued over 150 million, which is just, people did 5 years ago laugh at us if we talked about that as being a thing. So, we're one element of a whole ecosystem of businesses that had started up and moved things forward. It has been, we had John Elkington on earlier, which was an amazing podcast, but he described how sustainability in his career was like a snowball, gathering snow as it went. It really has felt like the last 7 years has done amazing things, and it feels like the pace is increasing. Are you feeling that same momentum?
Yeah, definitely. I think since the early stages, even from our sort of organisation, just slow steps, a few things here and there, a couple of policies designed, and now we're really getting to the point where we have large-scale transactions, and we're working on UK projects and also globally all over the world to deliver massive programmes, working with investors and farmers and environmental organisations who are all looking at these new finance markets as actually ways in which they can support their nature objectives. It's no longer just a concept. It really is happening, channeled in reality.
How do you, for people that aren't as familiar with it, how do you articulate natural capital through an investment lens to people? How is nature and the environment investable?
It is a very big question. I think one of the issues around the market is all of these terminology challenges and what they all mean. So I'll try not to use acronyms. But really, I see natural capital investment or nature finance as any route to unlock the finance we need at scale to deliver nature restoration and protection. And one of the key elements of this concept is really that nature delivers so many benefits, like clean water and carbon sequestration and flood mitigation, all the nutrient removals. And historically, lots of those benefits are just received for free. But the thinking around natural capital investment is that there's an increasing case for organisations and companies and governments to pay for the outcomes that nature delivers. And where we can start to then get payments for these benefits at a really large scale, this is where we can start to then bring in investors who might be looking to provide investment and be repaid over time. But I think what we need to see it as is it's not just a focus around return-seeking traditional forms of investment. It's many different routes, and it's really important to think about from a nature project what kind of finance is really suitable for them to deliver their objectives and community outcomes and support the landscape in which they live in.
Give us some good examples. Were there through to case studies?
Yeah.
What have you seen that's worked well in terms of matching a project or an environmental intervention with investment?
Yeah, it's a very good question. So I think some of the early examples that I've worked with for a long time now is many projects with the Wildlife Trust right from the start of Finance Earth. And they were faced with the challenge that much of the funding they received was some very piecemeal, lots of funding bids for just short-term funding. And their challenge was how they could finance projects over the really long term. Conservation projects don't just end once you've restored. You really need to maintain them. So we worked with them through the problem of how they could source new forms of finance for their project. And I think one of the good examples is initially they were really focused around this new biodiversity net gain market was coming through. This wasn't yet in policy, and it was really the obligation on developers to deliver an uplift in biodiversity as a result of development. And we worked in the financial aspects of the projects. We reviewed several biodiversity net gain projects. What was interesting was the different forms of finance that was required. So one wanted to acquire a farmland and set up a habitat restoration project and then sell those biodiversity units over time to developers. So it needed investment, and then they could repay back the loan over time. Another one wanted to persuade a local authority to finance an old golf course and turn it into a habitat restoration project, with them delivering project, and then use the locals' demand for biodiversity units from their developments to deliver. And then the third just wanted to do a rewilding project. So they didn't need any upfront investment. They just wanted to make sure that the revenues generated over time covered all the really high maintenance costs of rewilding. So you kind of see that natural capital investment needs to encompass lots of different elements, from is there an upfront financing need, who's there to pay for the outcomes, how much are they going to pay, how long does the project need to go on, but what does it cost, how can it all be verified and accredited over time. So that's then led to wider work with on carbon markets, again, with how you can stack up different forms of financing together. And then actually there's much more than just the projects themselves. It's all those other tools that are needed to create markets. So work with the likes of the Crown Estate as a landowner for what the business case is for them to invest in nature, and what the standards need to be to make sure that it's measured and credited, and what policies need to be in place to drive that demand, make sure that the developers are there to pay for the outcomes that nature delivers and create those new markets. That's where it sort of has become this emerging, evolving, complex space where we need all of these things to fit together to make those investments work.
Love it. I love the energy, momentum, excitement you bring to every aspect of it. I love it in exactly the same way. I wrote a piece a few months ago that equated the development of the natural capital economy to the birth of the internet, and all the infrastructure and the systems and processes we need to really live in a natural capital economy. So ratings curves, insurance, taxation, actual markets that operate coherently, trading platforms, all those things are starting to develop. So B0 Carbon last week did their Series C round. So you've now got a ratings agency. They raised 30 million on whatever, maybe even 100 million valuation for the ratings agency side of a carbon product. At the same time, you've got Keita and Gallagher's and others offering an insurance product for carbon now. And then all the way through to Tree Economy with their monitoring verification. You are getting those systems of processes, and even the Treasury now insisting on applying VAT to natural capital products. I think I can't believe I'm saying this, they're exciting things that are happening. I'm describing taxation as exciting, but they show that there's a belief that market's big enough to have a rating agency that has that valuation, and that there's something that's worth taxing. Are you seeing similar echoes and ripples of the economy and the market growing?
Yeah, so definitely there's been just sort of a flourish of new businesses operating this market, from the monitoring or helping you with the tech required to store and manage your natural capital assets, to the new standards and codes and tech providers and platforms. And I think, though, what we've seen is, even though those new businesses are emerging, they're still trying to work out exactly which one is going to be the right solution for, say, how we measure and monitor biodiversity. We've got so many different options now that it can create a bit more complexity in the market as we're trying to work through exactly what the right approach is.
Even that fits in with my internet analogy, in the respect that Google was the 21st search engine to launch.
Exactly. I think it kind of fits into that mode. We've got so many different ones, and everyone's kind of trying to work out which are going to be the ones like Google that really progress. And I think one of the issues there is we do really need more support to develop the market so that there is actually the demand to make use of some of these services. I still feel that, say, for example, all of these tools to measure and monitor biodiversity and set up your standards and systems, if we don't yet have the regulation that drives the demand from the companies that are interested and willing to pay for those outcomes at a broad scale, then there's just not enough flows of finance and benefits going through the system to actually enable those companies to really scale and accelerate as quickly as they possibly can. So I think key to all of this is definitely pushing forward that demand push, so we have more and more buyers for the outcomes that nature achieves, so that you can really then pay for all of those wider services and business and systems alongside.
And so if you had a magic wand, it would be a regulatory lever you pull.
Yeah, I think we just, at the moment, most of these markets are still voluntary, and that can only go so far. So in the UK, our openly compliance market that we have in place is on developers for biodiversity and nutrient loss through developments. And we've seen how much those markets has just driven so much action with the tools for standards and measurement and the ecologists and registries and all those other elements. Imagine if we had those kind of compliance markets for all the other ecosystem services, and to drive so much more demand across other buyers.
Why don't we have them?
I think, okay, so there's a range of reasons. We still need the evidence and data around the benefits that nature derives. So even though we really know that nature delivers all these benefits, we can't necessarily prove that rewilding a project benefits a downstream community and reduces flood risk in a way that's saving and insure enough to pay to that benefit.
It's a difficult one because you can go at it anyway from government inertia and not willing to broach something that's difficult or complicated. You can go to the fact that the civil service don't want to change the system, and because they don't believe in changing things, we could just generally bottle on the way we are on things. But then again, a challenge with that is DEFRA have actually moved something forward with BNG. So even in my world, it loves to criticize the civil service. Yeah. They have achieved progress and it's one of the biggest developments we've seen in terms of a market that's actually got regulatory support and systems and processes around it. And I think there's other big issues to worry about, and when can it get the traction of getting the consensus required to put it in place. Me and Chris spent a lot of time looking at the difference between BNG from an English perspective in terms of being regulated and the potential of nature credits in Scotland, which would be a purely market-driven mechanism. And you look at Highland Rewilding, Jeremy had 2 of their 3 estates before we even found it, so they were way ahead of schedule in terms of like land acquisition and growth, but their model was very much based on those nature credits needing to come, and I thought they would. I thought the market, and I believed in market over regulation, would push that forward, and it just hasn't come at the same rate. And you've now got BNG, and some people will criticize and attack it, but it's done more good than any other mechanism and instrument we put in place. So I think it's difficult. I think it's complicated. I still think the best and the brightest companies will find a way of monetizing and genuinely valuing the environment.
Yeah, I think that's kind of the important side of things. So you can think about more compliance markets, so requiring all companies to pay a carbon tax for all carbon emissions. But when it comes to government and their regulation, there is trade-offs between, price of food and expectations from what people expect to demand and that kind of cost of doing business. So I think a much stronger route alongside regulation where it does fit to require mitigation, but actually is the evidence that investing in nature makes business sense on its own. And there's actually a clear commercial case from a business to invest in nature. And I actually think that is a more interesting and scalable market. So we're starting to see that with some of the work we've been doing around supply chains and companies working together to address issues in their supply chain. So it's really far from some of this UK work, but we've worked with really large-scale fisheries companies like Mars and Cargill, who were really interested in ensuring that their fishery supply chain is sustainable. They need that the products do their business. They've got a lot of risk from nature degradations in the sourcing, but they just can't fund it on their own, even though it makes sense. So now there's models to bring them together so that they can collectively fund improvements. In this case, through fisheries, they all pay just a premium on every ton of product that they purchase. And that enables them to share the cost of doing business, apply it to just the cost of fish produce, so that it actually starts to be just a commercial decision from their business. It's not just a CSR payment, it's actually deriving and driving that benefit at scale. So we structured a fishery improvement fund so they can all come together and contract within that. And that creates that long-term revenue stream to support the fisheries protection and enables investment to come and support the upfront investment. So I think actually those sort of supply chain business reduction and like security over the cost of doing business is actually going to be a really important driver. So I'd much rather government focus on ensuring that companies commit to things like the task force, the nature-based financial disclosures, so they actually have to assess the business risk to them and the dependencies of nature, and then they can start to work out what they need to do about it. Because I think that will be so much more drive behind that when they really see the business sense, instead of it being all mandatory obligation and the implications that would have. So I think you just need both.
How significant is the risk of nature in terms of the global economy? Can we put pound signs on this?
People are starting to put pound signs on it. So a couple of years ago, WWF looked at it and saw it was nearly $500 billion per year, the cost to the economy. But I think people find that so hard to quantify. And again, people are used to seeing nature for free. They haven't considered themselves what the cost and implication of nature and the risk is to their business. And there's not necessarily the evidence there that it'll impact them. They want it to be equal. So one business themselves, how are they going to address that impact on their own? That's when we need all of the businesses to come together, to collectively work together to address their supply chain issues and the risk, because they can't do that on their own. It seems unfair, and they'll have free riders and all of those sort of economic problems that mentioned. So that's sort of the challenge about equating those large figures to just assume that everyone is going to act straight up from that.
They're just not, the numbers just become real to people, don't they?
Yeah.
There was a lovely, so there's often people express things in different metrics to make them more accessible. So when you talk about water, people talk about Olympic swimming pools or something to make it visible and accessible. The one about large mulbers that I think is the most effective is it's something like 1 million seconds from now is the end of the week, and 1 billion seconds from now is 33 years away. And when you think about it, it's like, wow, because we can equate it in our lifetime as something that's accessible to us as a number. It makes it so important. It makes it so much easier to grasp it. I think language is fascinating about this sector as well. You touched on it earlier about acronyms and things like that. I feel even the language for the sector is developing. So Task Force for Nature-Related Disclosure, carbon markets, BNG, units, monitoring, verification of report, and so many terminologies that just aren't accessible yet. And I think even the work we're doing now is shaping and developing that language.
I think that's where even the reason why Finance Earth actually came into existence was to try and bridge that gap between the nature conservation community and the investors and try to translate between them, because otherwise you have the issue of all of those financial terms not being clear to the nature conservation community. And we try and actually show that a nature project, when it's brought together in terms and sort of payments for the outcomes and income generated, it can look just like a traditional investment.
It's packaging the environmental aspects in a language and a terminology that the investors would understand so they can.
Exactly. But I think it's also just important to always start with what the financing needs are of the projects, so that actually when they're thinking about investment, they already know what their specific requirements are.
And in terms of where you've found good fits of the relationship, has the investor come in with my red line of a return on investment or an annual, what do I need that investment to do? Is there always a red line to that, or have you been able to flex and adjust the investor need based on the impact the project's able to deliver?
So I think, as I said, we generally always start with the underlying project needs and work through what kind of investment would suit that project, and then match them up to investors who want to deliver both impact and then possibly the financial return. We see investors generally out there with their kind of requirements and criteria. So it's about approaching those investors that meet the project. So it could be a foundation who looks at both impact, and then they might accept a lower cost of capital. But we're generally finding the investors out there, they do need to see a return to match their risks. And so it's not always possible to kind of totally shift their perspective. We really need to show that revenues can be generated from these projects, so that demand point much more clearly, so that it really makes sense from the investor side of things.
That makes sense. One of our observations has been that the environment sector is increasingly held to a standard of perfection. So if you've got a project or a team, it could be a trust or a private organisation that's restoring a woodland or restoring peatland, there'll be a lot of challenge. There won't be a celebration of the good that's happening. There'll be a challenge about, but you used a diesel vehicle to get the trees there, or they'll attack a periphery of a project. And have you seen that? And if so, why do you think we try and find perfection as opposed to celebrating the positive element of it?
I think when it comes to a nature project and finance, it's because nature and finance aren't used to working together.
Just uncomfortable.
No, it's just an uncomfortable collection. And I think we have seen, again, before sort of our organisation came into place, we have actually seen challenges always throughout where finance and the corporate sector benefit from nature and nature loses out. And so actually quite a lot of the theory in itself when we came into this market was, why do you even want to bring investment into nature? We should never actually let the private sector and investors go anywhere near nature, because nature will just lose out. But I think we've since shown that there's this huge financing gap for nature of 6 billion per year in the UK even. So we can't just rely on philanthropy and government funding. So we need to look at the private sector, but we need to shift it so that actually it's the nature communities and climate that benefit, and it's not the private sector profiteering. So I think that's why there needs to be so much focus on high integrity and delivery, because we've also seen some of the issues in the carbon markets, for example, where projects haven't been delivered, corporates have overclaimed, and there's been greenwashing issues. And the outcome, the communities have been driven out, and the right kind of outcomes haven't been delivered. So I think while we don't want perfect to be the enemy of the good, and I'm really keen to make sure that we don't just tarnish and say these markets won't work, and we work out how to make them better, we do need to strive for the highest possible outcomes, because we are at risk of the evidence being that nature doesn't benefit in the way that it needs to through work in the private sector. So that's why we have to be so careful.
So what does a really good project look like from that high quality natural capital product?
So I think there's a lot of different elements that we can learn from the likes of carbon markets to really define like what a really high quality project looks like. And I think key areas need to be around the additionality side of things. So one of the issues before is that all this money is coming into projects, but there's evidence that it would have happened anyway. So now we've got really good tools around making sure that we can properly baseline our starting point and actually not just rely on our forecasts. We actually dynamic baselining and look at shifts over time so that we're constantly seeing what would have happened, comparing it to what has happened, and not just starting from a fixed point. So I think that's a really important.
One of my frustrations about the additionality point where it relates to woodland carbon
Yeah.
is the perverse consequence that mature woodland becomes worthless.
Yeah.
So from a carbon perspective, strictly speaking, as a private landowner, you would be better off cutting down your ancient forest and planting new trees. Now, people go, oh, you can't do that, I can't do it. It happens all the time because there is no real environment regulation, very little, because the organisations are funded for regulation. And I'm not saying there should be. I'm saying people should do the right thing for the environment, but we've inherently created a perverse incentivification method there. So that's my one frustration with additionality.
I do agree on that. I think it's really difficult that most of the markets that exist through private sector are derived around delivering sort of emission mitigating for impact. And I think the problem is that it means that high quality nature projects don't currently have access to markets. But the reason they can't is we can't let a developer who's delivered biodiversity impact pay money to run a high quality project, because then you just don't deliver uplift. So I do think it's a real challenge, but I think we need to find other routes to incentivize maintenance of high quality protection so they're not losing out. But I think that's where government actually needs to step in, because the private sector can't necessarily pay for all of those things because it doesn't then deliver that uplift. I know it's really challenging, but
I think mature ancient woodlands are a bit like safety deposit boxes for carbon. They're full stocks and stores that need to be preserved and maintained. Are they providing the same service as new sequestration? No, of course they're not, but it's still a valuable service. So I think almost there could be an exchange rate on the woodland carbon code that, yes, you're not accruing that the year, but the ongoing maintenance and storage is so valuable as well. And then that blends into, but actually, is it the biodiversity and the nature benefit of those type of woodlands as well? And one scenarios around stacking.
And they have actually tried a lot of those approaches internationally around payments for stewardship and protection. That's where the red plus in carbon markets come from. And I think it's really important as well that people don't start to think that the only route to delivering nature protection and restoration is around, carbon removals and uplift and restoring ecosystems. We do need to make sure that we finance the protection of what's there, those carbon stores. So I still think that those protection-based carbon markets are really important, but that's where we need to make sure that we have, as far as perfect, all of those systems from additionality and community benefit sharing, and making sure we only sell credits when they're verified to prove the outcomes are delivered, and we get better pricing into the market so the full life costs are covered and all the community benefits can be achieved. All of those things is what's needed to create that really high quality project. So it doesn't necessarily always have to be about restoring. You do need to protect what's there. I think in England it's a bit harder, where you can't necessarily evidence that you would lose that project if you didn't have that intervention. So we need government to continue to play a role. And it isn't perfect.
I think all we need is significant enough private sector. So say someone invested in multi-million pounds in mature woodland restoration and said, so we were speaking to an amazing renewable energy firm that said, they're 12 years old. And they said, we can't go back in time and offset our emissions. And they were visiting Leon with us in London. They looked to the rainforest and they went, but they were sequestering carbon when we first started. So, and they were like, if almost there was a mechanism in that way of saying, we will protect £1 million worth of woodland in that regard. We're not claiming anything forward offsetting. We're just looking at this historically, which we never had to do anyway. I think there's a market moving off forming. There's a pebble we could throw in a pond to create the ripples of that one, maybe, in terms of the market.
Yeah, I think that in some way that links to the fact that we shouldn't necessarily push directly only with these credit markets. So the biodiversity net gain, carbon credits, biodiversity credits. There needs to be some other routes for funding these things and linked to the corporate work. I think it's still around emissions reductions, but we are also seeing sort of companies coming together and paying for the better sustainable agriculture type work all collectively to incentivize emissions reductions, because emissions are going to happen anyway, but how we can reduce these emissions and support sustainable farming at once. So early this year, we've launched this with Solar Station Exchange, a platform that enables companies to come together and for the first time to pay farmers to reduce their emissions in their supply chain collectively. And there's no selling of credits. So it's funding improvements directly to support net zero targets, but they're linked to corporate claims instead of always going down third-party credits and what that means and all of that aspect. So I think that's another really interesting area.
Interesting. So the investor or the buyer into that scheme will be able to say, across our supply chain, we've reduced emissions as a result of that investment into the farm.
Exactly. So them coming together. So it's the likes of Tesco and Co-op and Lloyds Bank all working together to fund a fund that can actually support their Scope 3 emissions reductions through paying those farmers.
I love the collaborative mechanism. So it's interesting. Often markets are thought to operate best in competitive scenarios, but both in this regard and your fisheries scenario, they've actually formed well where there's a collaborative scenario rather than competitive. Did you have the challenge or the suggestion that why on earth are we paying farmers for what they should be doing anyway?
I think, it is a bit of a challenge because it's focused around generally farmers of a slightly lower quality rather than higher quality. So we still have that issue that those who do well lose out. But I think farmers have actually had such different incentives going on over the year. They can't actually really be blamed when they've had subsidies for one thing and then shift and payments for public goods and different incentives to reduce food in a certain way. So I think actually we do need to have the incentives there either through government and these companies to support farmers to shift to sustainable improvements in their supply chain. They can't necessarily fund the work on their own. So I think it's important not to sort of push the focus of the blame on farmers when they've got a lot of incentives that they be dealing with and it's new approaches for payments for these public goods.
What do you think of, so often when people talk about natural capital, they seem to find the regenerative agriculture the most easily accessible concept, or certainly when we have interns, a lot of them are very set on wanting to work in that sector. And across our 43,000 acres, about 10,000 acres of the involve regenerative agriculture of some type, but we wouldn't profess to be farmers. What do you think it is about regenerative agriculture that catches the imagination and such?
I think it's one of those concepts that's way more easier to understand. So when we think about these markets for payments for ecosystem services, there's these 4 different words of jargon just in that one sentence. And so when you think about nature delivers products and services, the services part is where you start to feel economics in. It's difficult to think about carbon and biodiversity and water, whereas everyone knows that you can grow food and that's the product from nature. So I think immediately it's so much easier to actually relate to the products that nature provides. And also from a financing perspective, there's already existing demand for the product. It's about making it more sustainable. Whereas the services is where we've already talked about all the different things that we need to have in place, from the codes and the standards and the monitoring and verification. So I think it really comes from that. Is the product side is so much easier than the ecosystem service to really relate to what that means in practice.
Makes sense. Accessible and visible. You talked about communities earlier. How do you work and how do your projects include local communities in what they do?
So, finance as itself, we were started as sort of a social enterprise, and communities actually being at the heart of the focus of what we wanted to do. And our founders came from the social investment market. So initially it was all about taking those learnings and applying it to nature. It's actually been interesting as we've grown that lots of people are focused around investing in nature for its own right. And that's where communities haven't been involved. So we involve communities as sort of the center and the start of what we do. We think it's important to also be aware where you don't have all the expertise, particularly where we work internationally. So the main thing that we always do is we mainly work with like a local partner, an NGO, across nearly all of our projects, particularly if we work internationally. And that they're very key to ensuring that the whole project is designed right from the start with the community in mind. So we have to engage early, the ongoing iterative process, what exactly does the community want to achieve. And then from a more financing focused perspective, we often design like the governance structure as a not-for-profit with communities as owners of that not-for-profit. And then we always put in place accounts where any money comes through that are really protected for those projects. And there's clear structure for how money is paid out to communities to make sure that these projects do not just benefit one organisation, particularly outside of the location. And then that benefit sharing mechanism as well is really important internationally. And some of those learnings coming to the UK is making sure that there are contracts in place so that the communities are allocated so a fixed share of any of the profits coming out of the project so that their livelihoods are supported. And especially as many of these nature projects, there are trade-offs. Protecting mangroves means that you're not getting rid of for aquaculture. So you really do need to think about how we could best manage and monitor these projects over the long term and what exactly the benefits are going to be. So that's why it really is a key part. I know that in the UK it's totally different as well.
I think it's become challenging in some projects because you get scenarios like the one you described with the mangroves there, where someone would observe a project and go, oh, well, those people are planting trees on their land over there. I will pay them for that, please. And you're like, why? Well, because the people who are fishing in the mangroves got paid. Yes, but it was public land and they've had something that's been removed from them. This is private land. You haven't been invested or involved in the project, and actively you said, I don't want any trees over there. They're different scenarios. I appreciate it. I think that almost the different land ownership structures and working remotely actually brings a clarity and more of a simplicity to it. Of course, there's a revenue sharing in that scenario. Where we think it'd be wonderful to do that is on common land or crofting land. And it wasn't a project we were involved with, but it neighboured one of our estates where they were trying to create a crofting woodland, and they were looking at the carbon side of it, but we said you really could look at this collaboratively together to do this. I think somebody was on the podcast recently. It was Richard Benwell, Collier Sadling, was brilliant, and he described what you got there as a difference between public interest and vested interest. So a person that says, well, I want to do this with a landscape that isn't theirs or is not a community asset in any way, that's a vested interest, as opposed to someone who is a neighbour or has rights over a land or has enjoyed utility on it for a period of time. Of course, they should be consulted and improved. But in Scotland, there are some sort of horror stories of people who might live 3 or 4 hours away that are demanding a right to buy on a piece of land and things. And it becomes a barrier to any form of positive progress because you have to try and find consensus to something about someone who really isn't a stakeholder in any normal conventional way.
That's why I don't think you can have sort of a one-size-fits-all approach. I think we've seen lots of issues in the carbon market, so communities are so important to some of all the projects that we deliver internationally. And in the UK, it's a really key part. But I think you also need to think about what exactly is the reason and who are your communities. And, many of our projects actually we were working with in the UK, that they're owned by the Wildlife Trust, they're adapting based on their need. I think when you're acquiring land in a different place to where local stakeholders are is so much more important. So it's really thinking about that context.
People will still challenge us and go, are people really against that? Some, yes. Most don't care.
Yeah.
So I think 80% of people don't mind what's happening. They're busy living their lives. 15 to 18% of people are hugely supportive and very kind, and 2% just don't want to see anything change. And
yeah, that's why I think it's one of the things I always see is there's always going to be differing opinions, and we see even a lot of those articles going out about tarnishing, carbon markets are the devil and biodiversity markets will never work and we should never engage with investors, they're just going to profiteer. I think it is so important to still, I feel like a lot of this negativity creates an excuse for inaction. So if we keep saying that these markets will never work, companies do have an excuse to just say, I'm not going to buy anything from nature, I'm not going to fund these projects. Whereas actually at the moment, carbon markets are one of the only routes to massive finance at scale. Like I'm running an accelerator program trying to develop high quality carbon and biodiversity projects across Africa with a development finance organization and FSD Africa. And what we've seen, we've gone out to the market and we've got 100 projects have submitted for funding to help them go through all of the project development and biodiversity baselining and finalize the community engagement in line with free prior informed consent processes. And there just isn't, they really need that support to get those projects going. We really need to prove that these markets are transparent and trustworthy and build that credibility in the market. So I think that's just a really key element that we have to keep like building and improving, but avoid the noise in some respects, just so we can keep moving forward. It's not going to be perfect.
And I in back-to-back weeks, we had a piece that went out about how sadly the environment sector still loves a free internship, still likes to ask people to work for nothing before giving them a role, which we think is inappropriate. All our interns are paid. So that article got a huge amount of interaction. Lots of people go, of course, this is brilliant, the way forward. Following was a piece on how without these markets, the private sector organizations that want to work in conservation can't function without being profitable. And the exact same people that were celebrating us for paying our interns were saying we shouldn't be making a profit out of the environment. Both things can't be true. If you want people to have careers and opportunities and to be paid to do the right thing for the environment, the money has to come from somewhere. And that's where, through to tree planting, to fences, to deer management, to all the practical things on the ground, that has to be funded somewhere. So when you do deliver a large-scale woodland restoration scheme or peatland scheme, all that money is inherently spent locally because you're not bringing in contractors from miles and miles away to plant trees or to do fencing. But equally, as a sector, we need to respect and treat those as actual industries. And if we leap back to asking, it's all lovely for people to do a volunteer day tree planting. If you don't treat it as an actual profession, we'll never develop the infrastructure and the skills we need to service those markets moving forward.
Exactly, which kind of linked to the point of all of these organizations that are developing. Do we really think the market is there? And we do really need to make sure that all of these function in a way that is financially viable to actually enable these businesses to flourish and you to pay your interns and us to as well. So that is a key part in making sure that we channel the credibility of the market as well.
I think if we're in a world whereby the natural capital economy is such that anyone can profiteer, lots of good things are happening because there's enough money in the system. So do Google profiteer from what's happening? Yes, but so do every other app developer and phone manufacturer and everything that uses that system and infrastructure. Looking ahead, what do you see as the big opportunities for finance and nature and the environment in general terms?
There's so much. As you said, it's kind of just moving forward. We're at the dial-up stage. But I'm really excited to hopefully see these carbon markets actually become high quality and high integrity. So we've got this symbiosis coalition with Google and Amazon all coming together to show that there's demand for these high quality projects. So I think that would be, and seeing the outcomes of the program that I'm running, pushing you forward in those markets. I'm also excited to see what happens with the voluntary biodiversity markets. Can we actually all align and agree on a standard or standards that we really all want to back and push that forward? And actually work out how we can measure biodiversity and persuade companies that they do want to finance it at scale. There's also all these new markets and ecosystem services. Can we get, I'm working on the saltmarsh carbon code. Is that a new route to channel money to support saltmarsh restoration? We've seen rewilding carbon. We're looking at ecosystem service demand for health and well-being and employee retention and community engagement. And then I think most of all, probably excited about, as we actually do have, the likes of mandatory requirements for disclosure around nature-related risks. Sounds boring, but if we should fundamental, if we can get those companies to all really notice the risk that nature degradation delivers to them and see that $450 billion per year affects the economy is actually affecting them. And they can create that commercial case to invest as part of a cost of doing business. I think that is a really strong focus going forward. So what are you excited about?
Hopefully by the time So we're working on a deal at the moment, and you should never talk about these until they're a thing, but we'll hopefully have our first sale of carbon credits at some point this year.
Yeah.
And if we go through that deal, the number will be £100 a tonne.
Yeah.
Which will set a UK record benchmark and actually make it sufficiently impactful enough that it's authentic and transparent and meaningful and punitive in a way. So £100 a tonne, no one's going to say, oh, well, they just pay it to pollute, because no one's going to. It's too expensive a price point. But £1 a tonne, sure. I still struggle with the charge that people are paying to pollute, because that's still better than them not paying and polluting. So I'd rather they planted a tree and polluted rather than just polluted. Obviously, I'd rather they didn't pollute at all. So in a world whereby, and this partnership we're discussing is with a very, very high-performing, forward-thinking service industry company who are on the cutting edge of what they're doing in that sector. So it'll be something that helps us amplify, build trust and transparency and authenticity for it. If we can do that, we think we can make one of these inflection points for the sector. So I'm excited about that. I'm really excited about the increasing role of data and technology and across what we're doing. So we've got an amazing in-house drone surveying team and data analytics team who are doing some fantastic stuff. I'm super, super excited about a new group of interns. So we've got 6 coming this year in everything from estate management to rangers to communication to data scientists to ecotourism to what did I forgot? Nope, I think that's it. Environmentalists and across the whole business. And every time through that intake, and we literally have thousands of applicants. This we spoke on the day of the intern assessment. And the standard, the level, the qualities is super, super exciting. And the beauty of interns coming in, they bring new ideas, they challenge us, they push the business forward. And every year we've kept people from that intern process, which is wonderful. And we hope to do the same thing this year. And one thing we found in that intern process is on our final assessment day, so this year we brought in 15 from 2000, something like that. And about 80% of the finalists we bring in every year are female. So we're seeing a big pivot in terms of the gender diversity in the sector. Now, you're one of the few very senior women in the sector at the moment. Is that something you're aware of on a day-to-day basis? And is it something that you feel a pressure about in terms of being a role model for others? Does it even occur to you? How do you think about it?
I think it did occur to me when I joined finance as the most junior, but I actually now see that, similar to you, that we have so many women in this sector. And before I used to work in accounting and economics, I've always had loads of a very male-dominated sector. So I'm surrounded by inspiring women, and one of our co-managing directors is also a woman, and she's really pushing this forward. And so I actually see that this sector is really good. Actually, the gender diversity, it's probably much more on wider forms of equality and actually bringing in other communities and ethnic diversity. I feel is actually where we're really lacking. So I don't feel like I can really strongly push that forward. But from I really like the sort of flat structure hierarchy that we're all in it together. We're all collaborating. Whether you're with your intern, you value their ideas just as much as your own, and you sort of work together. We can't afford to be for anyone to kind of be leading the thinking. We actually all need to focus on it. So I think it's an interesting point that you've raised, but I really see so many intellectual women coming through.
We had a fascinating discussion with 3 of the sort of my junior members of the team last week about this. And I was going, well, what else can we do? Because a group of founders from the natural capital sector got together, and it was a predominantly male group. We were like, okay, something to miss here. What else can we do? One of my frustrations, people talk about stuff a lot and then do nothing about it. So I was asking Artie, what can I do about it? And they essentially went, shut up, Rich, you're doing it. We have a structure that's completely flat. We involve at least 7 members of the team in every recruitment process. 2 of our directors are female, multiple heads of are female. Our incoming talent pool is predominantly female. Their view was, you're going to blink and it's going to be a problem the other way.
Yeah. Although I do think it's worth not forgetting about it. So for International Women's Day, we're running my company. We're doing a whole session with all the female leaders in our company from our non-exec as well as in our organization to talk about different experiences in the sector and then get people to input on the across the floor around what we could do more in our organisation to support women and mentorship and what's required. So actually, I thought that was an amazing initiative that I'm really excited to take hold of and think about actually what can we do more, rather than assuming, that actually everything's fine because we get used to the status quo and that every other person in the natural capital sector is not female. You forget to notice because you're so challenged with the mission or what you're trying to achieve.
I think at OC as well, we're explicit that we're building a high performance environment and performance is the only thing that matters. And to hear that played back by interns, junior men across the business was really fulfilling. And nothing matters here other than being a good person, working really hard and delivering. So our time is almost coming to an end. However, I have my favorite question left to ask. What's the one question I haven't asked you wish I had?
I think I'm really interested in, I feel like we all need to be the pioneers in this and work together, and we can't just sort of pause and hope that things happen around us. And so we all need to kind of collaborate going forward together. So I'm interested in, so what more should oxygen conservation and finance, or you, Rich, me, do to kind of take this forward? But this is a question that you're going to be asking me. So when I want to answer it, I just feel like there must be something there to build on these podcasts that you're doing to make sure that we are working more together and collaboratively, because I really want to know, for example, when you do secure that £100 a tonne, yesterday someone was asking me about how we can make such strong assumptions about saltmarsh carbon without evidence in the market. I need that evidence from you. So that's one ask from you, but what can we do to make sure that we can build this together better?
That's the genesis of this podcast.
Exactly.
Celebrate, share the stories. And so to answer your own question back to you, you can help us find the next amazing guest to sit in that chair or wherever the chair is to tell their story, because you will have inspired 5, 10, 50 people that are watching you talk and go, wow, I want to be like her. I want to join the company. I want to do my thing that I can help impact the environment for the better. So the genesis of the podcast was to try and celebrate the people, the characters, the stories, the achievements, the challenges, the reality of working in this sector. And I think as long as we're all trying to do that, be as open about everything, and I think that is the beauty of, certainly in my 3.5 years doing OC and the 7 that you've done where you are, the sector is more collaborative and more open and more transparent than I've ever seen it. And we can both commit to making it even more so in future.
Yeah, that would be great.
You're an absolute star. Thank you so much for joining us. I've loved our time together. Been that fun time.
Well, thank you so much for your time. It was very interesting.
Our pleasure.